Welcome to Friday Takeaway, our morning edition. I'm Chong, joined by Chuang. Now, Chuang, this week it has been a rather quiet week since the starting of the Ramadan month. We don't really see much corporate news coming from the market. We don't fewer events to cover as well.
Yeah, it's been very quiet. We saw this morning the KLCI was about a quarter of a percentage point lower at 1,647 points. Market is asleep, as you say. People, I think, are getting into the rhythm of the Ramadan fasting buzz. So yeah, I'm not surprised, no transactions.
But still, KLCI is still higher than last week close of 1,636.46 points. Now, the biggest news of this week is President Obama has formally endorsed Hilary Clinton as for president.
Yeah, the first ever female in the party, and Bernie Sanders has swallowed the tough medicine and said, look, I will work with Hillary to crush Donald Trump. It's the battle of the blondes, as we know. Both of them are blonde. One of them is more stupid than the other, but it is what it is.
No, Donald Trump actually tweeted and he said Obama just endorsed crooked Hillary. He wants 4 more years of Obama, but nobody else does. But after a meeting, like what you say, after a meeting with President Obama a couple of days ago, Sanders actually came up from the White House and he said he will work together with Hilary Clinton to defeat Obama in
He's
November.
got no choice. He's lost the race, so he's got to collaborate with Hillary. But you know, you've got Donald Trump, who's a bit of a crazy, let it be said, and Hilary Clinton, who's got a bit of an albatross on her back in terms of those emails debacle. So we shall see how the American people.
So good luck to Hilary Clinton. Let's move along to our local news. Ringgit versus US dollar at 4.05, and this is on the back of crude oil prices holding up 52 US dollar a barrel for the entire week.
It's nearly double for the year, you know, and it's sustaining above those levels. I think supply concerns in the US are ironing themselves out. The Canadian, you know, also supply crunches also help things. Let's just say, I mean, this is what MIDF research said yesterday, right? They said the government might reduce GST to 5% if oil prices rebound to $55 a barrel, and to 4% if crude oil prices increase to $75 a barrel. If so, that's fantastic news.
But Putrajaya didn't say anything on this.
They didn't say, they didn't say. But this is, of course, MIDF postulating.
Let's move along and take a look at the Malaysian retail sales. It came up with some figures earlier this week, and it says retail sales actually contracted by 4.4% in first quarter of this year, despite attractive discount during Chinese New Year. So, in a nutshell, we still see a very slow spending market in the consumer market in the beginning of the year.
Well, retail sales, like the media market, right? It's very elastic, very responsive, very cyclical. And of course, as we know, last year the Malaysian Retail Association they downgraded their forecast 4 times during the course of the year. 2016, no letdown in the momentum as well. People are not optimistic. They don't want to buy. You know, if you are pessimistic about your future, if you are afraid of losing your job, Charlotte, would you go and buy that car?
I would rather save my money.
You save your money? Yeah.
So it was rather a bad year last year after the implementation of GST, but the sentiment has gotten really bad throughout the year.
Yeah, exactly. Well, we saw Nielsen saying that Malaysians are the least optimistic people in ASEAN. We something were below 80 on the mark, and we're one of the worst countries in the world. Too many things to be concerned about, Charlotte.
Now, World Bank actually slashed global growth. Talking about growth, right? They slashed global growth forecast to 2.4% from 2.9% on Tuesday. But Putrajaya actually came out and said that growth in Malaysia will remain intact, and they say they are committed to hit GDP of 4% to 4.5% in 2016.
Well, of course they would say that, right? They can't say, it's all going to hell and we're all going to die.
So I guess we're still positive on that.
Well, yeah, because I think, you know, the biggest producer of growth in the country is the government. That's where, and you know, hate to say it, but the GLC and the GLIC phenomenon, the private sector is nowhere to be seen because the private sector are cringing, right?
But I think all the governments from all the other countries in the world, they will still say positive about global growth. Right. Let's move along to cigarette packaging this week. Now, 81% Malaysian surveyed by Merdeka Centre, they say plain packaging would make it easier for illegal smugglers to make fake packs.
Well, of course, you know, contraband is a huge issue in Malaysia. I think 1 in every 3 cigarettes sold are illegal. They come from the same fields, right? The only difference is the label and the packaging. One says Marlboro Lights and the other one doesn't, right? So if I was a smoker, and if I knew that I wouldn't die from smoking those funny fags.
So if it's a white packaging, you would actually get it easier from the illegal markets.
Yeah.
And who would spend You know, who would spend
18 bucks
15,
per pack,
18
right?
ringgit
Yeah.
if you can get one pack for 3 ringgit 50 cents, right?
Yeah, you know the Penang Becha rider, right? Would he spend 18 bucks on a packet of Marlboro Lights, or would he spend $3 bucks on a white packaging? Right?
Of course, $3, right? Was safe. Now, BAT closed down at PJ. This is not news, but they are selling the land and the factories for 218 million ringgit cash to LGB Properties and Berhad. So it looks like the sin sector in this country, it has gotten really bad.
Well, yeah, of course, the government makes a lot of money from the sin sector. It is an easy pummeling horse. BAT said enough is enough. You increase prices by 42%. That's way too much. It's going to hurt sales. They said, forget it. Malaysia's not worth it anymore. I don't blame them.
So actually, other than BAT, we saw that Philip Morris and JTI, they have been increasing their prices as well.
Yeah, they've got no choice. They have to, because it's a government directive, right?
Yeah. So let's move along to Cliq Energy. The second oil and gas spec in the market was listed in April 2013 at 9 a.m. today, but the news was not out yet. High Court is supposed to give a decision on whether Cliq Energy shareholders should vote whether to liquidate the company or not.
Yeah, I mean, like I feel, see how that's going to change the whole issue, because they couldn't find the qualifying asset. The SC has said, look, you've got to shut down according to the rules of the spectrum. So that's what they've got to do. I fail to see how that's going to change anything.
They actually found an asset in Kazakhstan, but the thing is, it was too late. It was over their 3-year period. So I guess it's going to be something like what Sonar Petroleum had for the past few months.
Right.
They are going to liquidate the company.
Yeah.
So actually, in a nutshell, I think overall the spec market isn't looking too good in Malaysia as well. Only Hibiscus Petroleum has graduated,
and none of those fields are yielding. So. Yeah.
So let's move along healthcare sector. This week we are focusing on IHH Healthcare Berhad. It's a services provider in Asia. They have clinics all over in China, in Hong Kong as well. And the news is they are going to build a 450-bed hospital at Shanghai New Hongqiao International Medical Center.
Yeah, they've got something like 10,000 beds already, so this is that's going to increase that number by about 5%. They've been to Shanghai, they've been to China once before, so it's a huge market. They've got a new brand. IHH have got to make it happen, because India, I think, that the investment in India is dragging earnings in IHH, and IHH is a very expensive counter. They're trading somewhere in the 40s in terms of PE ratio, so it's a long-term play, as it always is.
Like what you say, this is actually their second time going into China. The first time they were operating, they actually partner with a local partner. They are operating a hospital in Chengdu. That was their first one, and now they are operating 9 clinics: Shanghai, Beijing, Suzhou, and a clinic in Hong Kong.
That's right.
But they are building another hospital in Hong Kong as well. It will be called Glen Eagles Hong Kong, to be open in 2017.
Excellent.
But analysts and research rolled out a report this morning. They call it Good Morning Shanghai, and they keep their hold rating on this company with unchanged fair value of 7 ringgit 20 cents per share. They are positive on IHH expansion into China with strong branding and track record. So what did RGB say?
Well, I think RHB says near-term earnings risk remain high, because obviously you've got to spend a lot of money to build a hospital, and you've got to equip it with all kinds of expensive equipment, so it's not going to be cheap, nor is it going to be earnings accretive in the near term, so clearly that's an issue.
We have a couple of hot stocks this week, and the first one is VSolar. It's an ACE market listed company, renewable energy. Credit Suisse Europe is a substantial shareholder with a 5.2% stake in the company. The stock actually became very active. It was because they signed an MOU, Memorandum of Understanding, with University of Technology Malaysia. They are going to jointly venture. They are going to work together
to do some research.
Yes,
photovoltaic cells, which is solar cells. It's a rebrand actually. They used to be known as Fast Track Solutions. I think Credit Suisse have seen the potential of a small cap in Malaysia. They've taken about 5.2% from the European asset management house. So we'll see how that happens. The 1-year return of minus 31.25%, not very good, but of course it's rebounding up about a third year to date.
29%, yeah. So KESMI Industries, another hot stock in focus, is a semiconductor burn-in and test specialist, and the stock actually rose from 4.07 on 2nd of June this year to 5.25 a couple of days ago. Yeah,
a couple of things to note about this little contract manufacturer. They're not supplying to the mobile phones and to the communication space, they're supplying to automotives, and that's the growth sector. They're a tiny company, 43 million shares outstanding. It's at 4 straight quarters of huge earnings growth, EPS, and it's just trading at about 7 times earnings, so it's worth a punt. Even though it's gone up by about 30% in the last 1 month.
So it's interesting to look at this stock because it bucks broader semiconductor industry.
That's
Because
right.
the entire industry it has been slumping, but due to oversupply to communication and computing segments. But this company has been doing quite good. Q3 net profit surged more than fourfold to 7.457 million ringgit.
That's right. And we've got one more, of course. AWC is a facilities management company. They have seen their shares also rise. They were slapped. In fact, they were slapped more than bitch slapped by Bursa Malaysia with an UMA. It's up to 75. I think today, this morning, 78 cents. So they've been on a bit of a tear. Again, driven by earnings, and I think they're trying to move away from their concessions focused management businesses to more the private sector.
So yesterday they say something. It has actually secured a maintenance work contract worth about 130 million for over a period of 5 years. So I guess it's good news for the company. That's why we see this stock continuously going up for the past few days.
It's been on a rising trend for the last 4 quarters. So yeah.
So moving forward, next week we are going to look at Malaysia inflation numbers coming out on next Wednesday, and even further out date of Brexit by the end of this month. So that's all we have today, and for more, please pick up a copy of The Edge Financial Daily or The Edge Weekly, or visit our website www.theedgemarkets.com. I'm Charlotte Chong, he's Khoo Chuang. Thank you for watching. Have a nice weekend.